Sejam muito bem-vindos a mais um videocast especial, diretamente da terceira conferência de escola austríaca realizada em São Paulo, na FEComércio. Meu nome é Bruno Garchagen e eu sou podcaster do Instituto Ludwig von Mises Brasil. Hoje nós temos o prazer de entrevistar Mr. Peter Schiff, que é investidor, autor e comentarista financeiro nos Estados Unidos, além de CEO e estrategista-chefe global da Aero Pacific Capital. Mr. Peter Schiff ficou muito conhecido, ganhou popularidade entre 2008 e 2009 através de um vídeo no YouTube intitulado Peter Schiff Estava Certo. O vídeo consiste de uma compilação de clipes de suas várias aparições em programas econômicos, a maioria entre 2005 e 2007, em que ele explica os problemas fundamentais da economia mundial e alerta sobre o colapso que estava por vir.
Thank you very much for coming and welcome to Brazil. I would like to ask you, you became famous to predict the housing bubble in USA. I would like to ask you, the bad incentives and bad decisions that create the problem were modified, or is there a risk of a new bubble in the future?
Well, I think we already have a bubble. It's not really in an asset per se like housing or stocks. It's in government. I think that the Fed is now fueling a bubble in government itself. If you look at the government bond market or the treasury market, you can see the bubble there because bond prices are ridiculously high. The yields are very low by any kind of realistic measurement. And the ability of the government to finance spending through the Federal Reserve has resulted in an enormous explosion in government spending. And I think that is the bubble that is fueling the economy right now. It's government. But ultimately, this bubble is going to burst as well when interest rates rise. And I think more problematically, though, for the economy is we don't get any benefit from a government bubble. Now, at least we got houses out of the housing bubble. Maybe we got too many of them, but you can use them for something. We're getting nothing out of all this government. In fact, we're getting less than nothing. It's interfering with the ability of the free market to restructure the economy. So by growing our government, we're growing our problems. And ultimately, I think the next collapse is going to be much worse because of all the things that we've done to delay the day of reckoning.
Ok. Estou nessa entrevista também com o presidente do Instituto Ludwig von Mises Brasil, Hélio Beltrão, e com o editor do site, Leandro Roque, para quem eu vou passar a palavra para fazer a próxima pergunta.
Yeah, Mr. Schiff, I'd like to ask you a question about interest rates. Some free market economists are saying that even if the Fed wanted to raise the Fed funds rate, it cannot do it because of the excess reserves. Like since the Fed funds rate is the rate that the banks charge each other in the interbank market, and since they have excess reserves, so they are not loaning and they are not demanding money. So they said that because of this excess reserves, the Fed cannot raise rates even if you were in charge. So is that correct?
It doesn't make any sense to me. The Fed can raise the discount rate whenever it wants, and also it can, stop buying treasuries, or it can start selling down its holding of treasuries. Mm-hmm. So the Fed can do a lot to move rates higher or to shrink money supply if it wanted to. The problem is it doesn't want to. It wants to sustain the bubble. It doesn't want to do anything to deflate it. Just the same way the housing bubble. When the housing bubble was inflating, the Fed knew there was a housing bubble, but they didn't care because they didn't want to do anything about it, because they knew that the housing bubble was fueling the whole economy. Mm-hmm. So the Fed went out of its way for years and years to deny the bubble existed, simply because they wanted it to keep growing. And so, they do the same thing now. They realize that there's a bubble, but they deny there's inflation because they don't want to raise rates, because they know the consequences will be horrific.
You believe in a bond bubble right now?
Well, of course there's a bubble. I just said there's a bubble in the government, so there's a bubble in the government bond market. But interest rates are going to have to rise, and when they do, the losses will be horrific. We just saw this $2 billion loss at J.P. Morgan. That's nothing compared to what the banks would lose if interest rates actually went up to where they need to be. And I think the Federal Reserve knows how vulnerable the banks are. That's why the stress test that they just did recently only looked at a big drop in stock prices or real estate prices. They didn't stress test a big drop in the bond market, which is the real risk. And of course, government finances itself, the government needs low interest rates to service the debt.
Yep.
If interest rates go up, we're in the same position as Greece, and we're going to have to ask our creditors to take a haircut. Otherwise, we'll have to default.
Well, the reason is that these free market economists are saying that the Fed cannot drain all these excess reserves from the banking system, and if it cannot do that right now, so they cannot raise interest rates.
It can do it. It just would cause a lot of damage.
Yeah.
But I mean, they could do it.
But can you picture this?
To do it,
can you picture them doing it? They'll have to.
Well,
do it,
I don't think they're going to do it until they feel that they have no choice. So as long as they can postpone the consequences, they'll do it. So I think they're going to resist it as long as possible. But it's a dangerous game of monetary chicken. The longer they resist it, the harder ultimately the decision is to do the right thing, because it just makes it so much worse, because you've allowed the problem to get so much bigger, and therefore solving it is more painful. If you're worried about the short-term pain, well, the longer you wait, to swallow the medicine, the more painful it is on the way down.
Peter, I'd like to ask you a question of a more pragmatic nature. A lot of people that follow us from our audience are worried today about what they should be doing with their savings. And I think most Austrians would agree that we will have a coming collapse that is getting bigger and bigger. The big question is the timing of it. So what do you think that the average person that has some savings should be doing over the next 1 year, 2 years? Which asset classes, what sort of investments they should be looking at?
I think savings, to the extent that you want liquidity and just savings, I think it should be in gold. I think I think that currencies offer very little in the way of maintaining their purchasing power. But if you want to have some foreign exchange in addition to gold, look at the currencies that have the least bad monetary policy, where they have higher interest rates and they have a more independent central bank, where they have trade surpluses, budgets in balance, things like that. And you can hold some of those. But
any particular country?
Well, there are a lot of currencies we look at: Australia, New Zealand, Scandinavia, Norway, Sweden, Singapore, Hong Kong, Chinese RMB. There are currencies that you can own, to get other than dollars. But for investments, if you have an Austrian perspective and you understand what really generates economic growth and wealth, you want to invest in assets or businesses in countries that are going to see a net increase in wealth creation and higher living standards. And so
stocks?
Well, yeah, stocks, but the businesses that are located in countries where you're going to see an increase in standards of living. And I think that what's going to redefine this part of the 21st century is going to be a major realignment in global living standards. I think that the wealthier Western nations are going to see big reductions in their relative living standards. And I think a lot of the Southeast Asian economies, or the so-called emerging markets, are going to start to command a greater share of world output, especially since they are disproportionately contributing to it. So I think the countries that have been saving the most, that have been producing the most, are going to emerge as much bigger consumers of the end products, rather than the developed world that has been borrowing to consume those products. So I think if you understand how it's going to realign, you can invest. And then, when you're looking around the emerging markets and you want to figure out, where should I concentrate, look for the countries that have the smallest government interference in the economy, that have the fewest regulations, the lowest taxes, the smallest government spending as a share of GDP, where the labor markets are freest, where capital is free to go to its highest and best use, and where you have all the free market conditions, or at least nobody is a pure free market anymore. It's all degree. I don't think any of the countries around today are America in the 19th century. But there are a lot of countries that are closer to what America used to be than what America is today. So look for those countries, and I think there's a lot of opportunity. But you got to be a long-term investor for the stocks, because you never know with short run, and politicians do pretty stupid things, and so you got to be able to ride that out.
Yeah, I'd like one more theoretical question. I know your position on fractional reserve banking. I know you're for it. I know you would also abolish the federal deposit insurance and also the central bank. But is that only it? I mean, if you do these two things, then you think it's going to be safe?
I mean, I'm in favor of fractional reserve banking as long as it's a function of the free market. So as long as you don't have government involvement to guarantee a bank deposits, then bankers know that, to the extent that they don't have adequate reserves, they run the risk of a run on their bank. They run the risk of destroying their reputation. So I think in a free market, banks will compete with one another, and they will strike a balance. Banks will strike a balance between a desire to maximize profits on loans versus the ability to satisfy their depositors, that their deposits are there and available when they need them. The problem comes in when you have the government coming in and guaranteeing the deposits, and so now the banks are free to have tiny reserves, and you have much more speculation and a much less, stable banking system that is prone to big failures and then moral hazards and bailouts and losses. And the irony of it is the government says that if it wasn't for the government, we'd have all these, instabilities and big bank runs and losses. And so we need the government to come in. And the government comes in and basically creates all the problems that they were trying to solve. And they take an inherently stable situation and destabilize it. And they actually encourage more.
Would favor competition between also state currencies, like the Swiss franc being used in the U.S., euro, as a transition.
Well, I think the best look at how many people in Latin America use dollars, or I think they should switch again. They shouldn't use dollars, but because people didn't trust other currencies down here, they didn't trust the peso, they didn't trust the real. They wanted, where do they keep their savings? They kept them in dollars, and they should keep it in gold, or other currencies are preferable to the dollar. But unfortunately, you've got a race to the bottom right now with a lot of currencies. Everybody wants to debase, and so there's really no safe haven in paper. The only money that can't be debased is gold, because they can't print it. They have to mine it, and it's expensive. It's hard to get gold out of the ground.
Yeah. And regarding this subject, what is your position on this e-currencies, these electronic currencies they make, like computer managed?
Yeah, I don't know. I'm a little skeptical there to try to, because again, how is that? It's just
they have an algorithm. They say there is a limit. They can't surpass it. So in the future there will be a fixed amount of money. But it's only electronic.
No, but there's no intrinsic value there. Yeah. What makes gold money is that you can't only just use it as a medium of exchange. You can actually use the gold. That it has its own physical properties that make it desirable, not just as money. I think it's important that money be a commodity, that it actually have value in and of itself, not simply be valued as money, but have intrinsic value. And so if you're just talking about putting your faith in some computer algorithm, all right, well, what can I do with that computer algorithm? If I can't spend it, what am I going to do with it? What ultimately gives it value? And if there's no value there, I just wouldn't have any faith in it. I don't have any more faith in that than paper.
Well, they say that the value ultimately will be given by the fixed amount of it.
Yeah, but it's a fixed amount of nothing. It's no matter how much I have, I can't do anything with it. Right? At least if I have gold, I can make jewelry out of it, or I could use it in, you can use gold in, electronics, or in, there's value. It has a lot of unique and special properties that give it value, because there's a lot of uses for gold. Now, most people don't use gold for those things because there are other metals that are less expensive, but you could use gold. And
And one last question: can you picture the world, or at least the United States, coming back to the gold standard, or at least a silver standard?
Absolutely.
Really,
it's harder to picture it not happening.
Really,
I think that if you go over modern history, and you look at periods of time where paper is money versus gold, paper is in the minority, and it's been tried. It's been tried many times, and it's always failed. Yeah. And and after it fails, you learn your lesson and you go back to gold. And it takes a while for generations to pass, and people forget what their grandparents learned, and they repeat the same mistakes. But I think it's a lot easier to go from a gold money to paper than to go. I mean, I think it's easier to go from paper to gold than gold to paper, because you're asking your citizens, when you're on a gold standard, you got to fool your citizens to give up something of value for something of no value. It seems to me that it's easier to say, okay, our money has no value now, so we're going to replace it with money that has value. And that's seems like a positive move, you know, especially if you do it, you know, when you have chaos and you have runaway inflation and you're looking for a solution.
Okay, but then you think they're going to do it, the governments are going to do it in an act of desperation? Like the gold standard puts a constraint on the government. So
yes, the governments never want a gold standard. It has to be imposed upon them by the people. Because no, it's like, you know, at a high school prom, nobody wants a chaperone. They just assume, you know, have no adults there.
Yeah.
But, you know, the adults know better, so there's chaperones. You know, so we need to chaperone politicians. They need to be reined in. They need discipline. They don't have it when there's paper. They have it when there's gold. So, you know, the public needs to be willing to rein them in. And they usually do that once they understand how much damage the government has done. And so once they totally wreck an economy and the people realize that it's wrecked and how it got that way, you know, then, you know, they can go back on a gold standard.
And you're a true believer that this is going to happen?
It's going to happen eventually, yeah.
All right. Would you like some last word about your bank that you are opening and
well, I mentioned,
the Brazilians?
Yeah, for anybody, I think it's, you know, I think the more people open up an account with me and start using gold and silver, we put more pressure on these politicians to adopt the gold standard or to refrain from printing too much money. Because if everybody opens up an account at my bank and is, you know, they're holding their gold, you know, if the politicians, you know, the paper money loses value if nobody wants it. If no one wants to hold it, and if you go into a store and someone says, no, we don't take paper money anymore, well, we'll take Peter's Euro Pacific gold card if you want to buy my products, you know, so they'll be forced to be responsible.
And the website?
Oh, at europacbank.com, EuroPacBank.com.
All right, Mr. Schiff, thank you very much for your time. Very nice talking to you.
Okay, thank you very much for this interview. Estivemos aqui hoje conversando com o Mr. Peter Schiff, junto com Leandro Roque e Hélio Beltrão, do Instituto Ludwig von Mises do Brasil. Muito obrigado.